and welcome to Moneylife. This is Sucheta Dalal. We are discussing the NSE again this time. That's a national stock exchange, as I keep saying, a near monopoly exchange in India and the world's biggest derivatives market. So, what's news this week, you would ask? No, it's not another Himalayan yogi, but it is that a newspaper called Hindu Business Line has scooped a show cause notice issued by the Securities and Exchange Board of India to the National Stock Exchange in August. We're in February in the previous year. This is August last year, over a big trading outage that happened last February, February 2021. Now, why is this making news? Why does this warrant a discussion? Well, quite simply because SEBI, first of all, has gone from issuing press releases supporting the NSE to throwing the book at it over how it mishandled this 4-hour disruption on 24th February last year. SEBI has accused NSE of having a faulty design in its critical trading infrastructure, lower than required capacity to handle peak load, failure to test and supervise, fail over logic, which is, I guess, an overriding logic when disaster happens. It is also alleged, and this is serious and it involves top management. It is also alleged a casual, lackadaisical, and less than honest approach on the part of the Managing Director, Vikram Limaye, Head of NSE's Clearing Corporation, Vikram Kothari, and the Chief of Operations and Technology, Shivkumar Bisin. It says these three allowed trading to continue without adequate risk management from 10:06 in the morning, when the problem first manifested itself, to when it really escalated, which was at 11:40. There are lots of other allegations. SEBI has also said it was told about it only much later. Now, the question is, at the beginning of March, all this, if you've been tracking us, we have been writing, discussing, talking about it since February. Nothing new over here, except here's the regulator formally issuing a show cause notice. Now, let's move away a little bit from this show cause notice to what's happening at the NSE. The beginning of March, NSE put out an advertisement seeking applications for the post of Managing Director. Vikram Limaye, the present Managing Director, was appointed in July 2017 and his term ends on 16 July 2022. He has said very clearly that he does not want a second term, so there will be a new incumbent. He's also said, I've done my best to lead the organization in a very difficult period and to stabilize, strengthen and transform NSE. We've come a long way in terms of controls, governance, technology, regulatory effectiveness and business growth. I want to examine this statement in the context of what has been happening at the NSE. Now, clearly, Vikram Limaye did come to clean up. Two key expectations from him were that he's going to reorganize the NSE, which was left in complete disarray after the ignominious exit of two successive predecessors, Chitra Ramakrishna, who is currently arrested, and Ravi Narayan, who was the managing director before her. The second expectation was that he will put the mess behind on the algo and co-location scam, which Moneylife broke in 2015, and he would get NSE listed. Getting NSE listed has been a long pending demand of large investors, and NSE has gone through all kinds of things to avoid listing, which we have documented extensively in our book, Absolute Power. Now, at the end of his 5-year term, neither of it has happened. But I keep saying, it's not entirely his fault. In fact, he's done things to improve relationship with various stakeholders. Why did things not change? Major reasons. One is that he himself was literally parachuted into what was the quicksand of the NSE mess. It was being run like a private fiefdom by people who headed it, because it was continuously headed by people who are part of the founding team for 25 years. This is an unbelievable situation, and very few organizations have it. Both which had it have collapsed. One was ILFS and the second was NSE. In terms of achievements, Vikram Limaye has also seen steady business growth. Now, this is not entirely to his credit. It's been a global phenomenon that retail investors have rushed to capital markets after the pandemic-related lockdown, and NSE being a monopoly, volumes go to it, it has been completely unaffected by all the goings on at the exchange, and its profitability and trading volumes have been higher and higher. The managing director takes credit for it. Also, which he washes his hands of, that's a different story. Now, 30 broker defaults in the past 2.5 years is something that anybody in the managing director's position would have faced real music about. It's not even mentioned. It raises serious questions about NSE's risk management, quality of audits, and supervision of brokers. Again, the seeds of this lax attitude is not entirely his 5 years. It started well before that, so he can blame his predecessors. But the point is, the only celebrated metrics at NSE for broker performance was not their repeated violations, which were condoned, repeated in the largest brokers that have defaulted. They were given congratulatory letters for drumming up higher trading volumes. All this has sort of come home to roost and is on Vikram Limaye's plate in his 5 years. Now, even this pales into insignificance in front of one big bad move, which is a root cause of Vikram Limaye's failure to clean up the exchange. It was his decision to contest SEBI orders on the algo scam of 2015. Instead of saying, not my baby, put it behind him, pay up what were paltry penalties. 1,000 crores, 700 odd plus penalty is nothing for an exchange with this incredible profitability and volumes. He should have paid and moved on. Every single problem he has faced in being unable to clean up emanates from there. To be fair, this was not his decision. They got legal advice, the board endorsed the decision, and their lawyers told them that if you don't contest SEBI orders, there may be criminal action. There's also some chatter about him being nudged from someone high up in SEBI to contest the orders, but that cannot be verified. Now, look at the deadly consequences of this decision. The legal advice was that if you don't contest, there'll be criminal investigation. I mean, look at the sorry state of affairs. The criminal investigation has happened anyway. The CBI, the Enforcement Directorate have got into the act, and the former MD and group operating officer are in jail. What can be worse? Was this anticipated? It would have been a different story if he had cleaned up. By contesting SEBI's orders, Limaye ended up also taking a stand that NSE and its top management had done nothing wrong. He knew nothing about what they have done. He had come in new, but he took the stand that the exchange had done nothing wrong, and contrary to his own claim of a major cleanup, what is now public information is NSE had no systems, controls, or even a proper chain of command in key decisions, including appointments and evaluation. In fact, a yogi was advising the managing director. What could be worse than that? But when you contest as an exchange, you are allowing the former MDs to shelter behind you. All of you have to take the same legal position, because once everyone has taken a stand jointly, you can't have different positions for others. So he ended up as an institution, taking the heat, saying there's nothing wrong, and allowing these people to shelter behind him. You can't have both ways. You can't say that I'm doing this, I'm supporting them, and you also say that I have cleaned up. In fact, SEBI's orders have shown that both Chitra and Ravi Ramakrishna, in their questioning, have clearly shown that they didn't even have basics in place, such as email data storage, which is mandatory for years, for more than a decade, even for brokers and smaller intermediaries. Co-location was started without ensuring simultaneous and fair access, even to large traders who pay for colo. They had no policies. They kept saying they had no policies and kept deflecting key failures to various departmental heads and officials, shifting responsibility. I mean, what are you defending? But new management took this decision. Another direct consequence of contesting SEBI's orders and admitting no wrong was that most officials who were close to Ravi and Chitra and who were responsible for what was wrong, not putting in place SOPs, not ensuring fair access, maybe some had colluded, some had turned a blind eye, all of them still remain in place. Nobody has gone out. Again, you take the stand, we have done nothing wrong. on what basis can you have a change? You have to continue with people unless they left on their own and you had to get new people. The only changes were people who exited on their own. And why would people exit when the NSE is going to bear the costs of their litigation with SEBI and all the appeals? What is the incentive for these senior officials to leave when the exchange is defending them? Litigation in India is expensive, drags on for years, and only benefits lawyers. It had significant consequences for NSE because you can't say, I'm not accepting SEBI penalties, and then say, by the way, clear my initial public offering. Large investors were already protesting this even before the 2015 scam. So when they got restive, NSE, instead of being straightforward, it began to quietly manipulate and work its way around SEBI to first be able to launch new products. Then the impounded co-location profits, it went to SAT and got an order in its favor, worked with SEBI to do it in cahoots with SEBI, I'm going to say, because SEBI kept quiet at that hearing and allowed the money to be released. So here what it was saying is, we will pick and choose the punishment that suits us. We do not accept your orders on everything else. And meanwhile, because we are this big powerful exchange, we will work through our contacts over there to start diluting things. Unfortunately, SEBI, the captured regulator, was playing along. In fact, in February, when the whole Himalayan Yogi thing blew up with an order, the same whole-time member, Anand Barua, had submitted a 9-page internal note to say that doesn't matter all the problems, ye to hote hi rehta hai, this keeps happening, we have to allow NSE to get listed. All that, of course, has gone out of the window with the CBI and ED getting into the act. But this shows that not just NSE, you need a complete cleanup at SEBI as well, because it remains a captured regulator. Now, SEBI also has had major change. It's got a new chairperson who has to deal with the decisions from a time when she was whole-time member. So she's the new SEBI chairman, but she spent 5 years there as a whole-time member. One of the things that she's going to deal with is the show cause notice on the telecom outage of February. It's important because look at the peculiar position in which SEBI is. SEBI doesn't come out smelling of roses in this situation. It has correctly blamed NSE for not acting fast enough, as I said earlier, keeping the exchange open from 10:06 to 11:40, no proper risk management. Apparently, SEBI was informed about the outage only at 11:30. Now, this is something I'm not buying, okay, because SEBI has an online real-time system. That system should have bleeped. In fact, somebody in SEBI's room which monitors that system, and we are assuming it's monitored 24/7, should have jumped up and said, hey, what's going on? So, as usual, people don't ask questions. So that is a question nobody has even asked us yet. But now SEBI says we were informed only at 11:30. But remember, these are questions that every trader, market watcher, Moneylife has asked since February with no answers. SEBI and NSE have since worked to plug some loopholes and processes, but we will know if the change has really worked when there is another trading outage, which is as large. Now, SEBI itself has to answer why it failed to follow standard operating procedures on restarting the market. Remember, a closure of the market, maybe because it's gone up or down 20%, has happened. Maybe not due to an outage. There is a very clear documented operating procedure for stopping and starting the market. It has been the subject of SEBI orders. Again, want to know about it, read our book. So SEBI cannot claim that it was constantly in touch with the exchange, as it has said in a press release. Now, the press release is unprecedented. 2 press releases to support NSE on the 24th and 25th is extraordinarily unprecedented, has not happened in 30 years of SEBI's existence. So it can't say we were party to it, we were in touch all the time, but we had nothing to do with the sudden decision to extend and reopen the trading. Why is that important? Because readers may recall that several large brokers, just before the announcement came that we are going to extend the trading session, keep it open beyond usual hours, these brokers had forcibly squared off open trading positions, causing huge losses to many investors. And after the squaring off, they opened the exchange. Investors who suffered losses due to this decision have a complete right to compensation, but neither NSE nor SEBI is even going in that direction or talking about it. They violated SOPs and took a decision that caused losses. They have investor protection funds, both SEBI and NSE, exactly for this. If we had a working legal system, these investors could have formed a class, gone and sued them, and got compensation. Now, at the time of the outage, SEBI was so supportive of NSE that it also said in a second press release that the framework for interoperability was in place and had worked well. What does interoperability mean? It means that when one exchange shuts down because of telecom issues or whatever, the trading smoothly switches over to another exchange. So we had the BSE, good working exchange at that time. Trades should have switched. SEBI picked up some data to justify it and did something extraordinary, like saying interoperability worked when the BSE itself was saying that it didn't work, and every trader in the market said it didn't work. The release also tried to underplay the crisis by pointing out that many countries have trading outages. Yes, indeed, many countries have trading outages. Technical and telecom issues, equipment failure can happen anytime to anybody, which is why there are multiple backups, which is why there is a disaster recovery site, which is why that site is tested, which is why there are SOPs about how you immediately switch to disaster recovery, what do you do about stopping trading, how do you restart it, how do you inform people. None of this was followed. And remember, SEBI has in writing, it's still on the exchange website, said, and we're showing it to you here, that it was constantly in touch with the exchange after 11:30 at least. Now, the other point is that all this would have made sense if it was a sudden, extraordinary event. Moneylife has written in February that NSE faced 9 trading glitches in less than 4 years. Plenty of time to test the system. This was the job of the regulator's supervision and oversight. All this points fingers at SEBI. Did SEBI fail to audit NSE systems? In agreeing to extend the trading session, wasn't it party to what happened? Like I said, SEBI is the regulator. It's administrative ministry. The finance ministry is not asking questions. So SEBI gets away with a tough show cause notice to NSE, saying that it has lower than required capacity to handle peak load. NSE in turn blames it on Hitachi and its telecom companies. But what has it done? Has it taken action? Did it penalize them? Has it sought any compensation, insurance? We have no idea. If NSE had insurance for its systems, if somebody paid up, investors ought to be paid up. Over a year now, this was February last year, March, we have no answers. This interesting argument of lower than required capacity should also apply to NSE's tiny investor protection fund. It's 1500 crore, but tiny as compared to its trading volumes, just a little more than the Bombay Stock Exchange, which has significantly lower trading volumes. And when it comes to broker failures, NSE very happily finds reasons to say it is always the investor's fault. Now, given its market dominance and 30 failed brokers in just about 2.5, 3 years, shouldn't SEBI be looking at the same issue which it has talked about last August in its show cause notice about lower than required capacity? In fact, even 1500 crore has happened because people like us at Moneylife, no other media really talks against the NSE, agitated about it when the first few broker defaults happened. Now, investors also allege that NSE's payment processes are not transparent. We only have NSE's word that it's impartial. We don't know what the regulator thinks. Has it even looked at any case study, or out of 30 brokers, has it studied even 5 in careful detail? We don't know. So my point is, we've had over 2 decades of regulatory capture of SEBI. We need a full cleanup at NSE, but with the new chief at SEBI, we think the spotlight is on SEBI as well, and we have to see how she handles the transition in her second stint and whether this watchdog body really is the watchdog that it ought to be. If you agree, share this video and subscribe to Moneylife News Bites. Thank you.